Well, I think it's fair to say that the market widely expects this to be just a ratification of their plan of bringing back 400,000 barrels a day of supply also for October. So this could be a non-event at the end of the day, but the market is trading higher, and I think we're seeing a little bit of this classical pattern of buying the rumor. And if the decision actually is to just ratify a 400,000 barrel per day supply increase for next month, we could see this a slight pressure downwards, at least on price after the fact.
We talk about supply getting constrained. You have this tropical storm in Ida, and then you have geopolitics. But yet oil prices slid in August by around 7%. Why do you think that is?
Oh, that was driven by concerns that these variants that we're concerned about now, the Delta in particular, was not going to be handled very quickly. For example, in China in particular, so they made a very quick lockdown of the economy, and now seemingly have managed to somewhat get that under control. So the market was expecting pricing in weaker demand outlook in Asia in particular ahead. But now some of those concerns have been let's say, relieved, and the market is again focusing a bit on a recovery in oil demand from here, but of course not without risk.
You follow oil very closely, Bjornar. How are you thinking about Afghanistan? Is this an isolated risk? Is this something that could become a larger geopolitical threat, and the impact on energy, which you watch so closely?
Yeah, I think so. Afghanistan is not important at all, of course, for the oil market in itself. But I think we need to pay very close attention to maybe the power vacuum or the power struggle in the region here over time. And then it could potentially lead to changed environment basically in the region, which of course is very important for oil supply and oil markets. So it's a bit too soon to say what sort of, let's say, influence other powers such as the United States may have in the future of the region now that there is this vacuum there.
We're watching Ida very closely. There were analyst estimates that gas prices could rise as much as 10%. But what are you forecasting?
Yes, the net effect basically on supply and demand is a little bit different from the crude side of things versus the product markets and the end-use fuel demand, for example, gasoline. So the way we see it now, and also supported by the Department of Energy's own assessment, is that refineries, which are consuming crude, are a little bit more down and will be down by a slightly longer duration as well than the Gulf of Mexico oil production. So it's a net positive effect on crude in itself, but mostly a positive effect on Gulf of Mexico-like crudes, like the medium sour grades in the Gulf of Mexico, and then negative for the WTI onshore light sweet crudes. But gasoline, of course, since refinery production is down much more than the end-use demand, gasoline prices will stay somewhat supported.